Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Nvidia's surprisingly strong sales forecast, soothing fears over stretched AI valuations, sending Asian stocks higher, even as traders all but wipe out bets on another Fed rate cut this year. We travel to Beirut to sit down exclusively with Lebanon's Prime Minister for a wide-ranging conversation. Nawaf Salam tells us Lebanon needs an IMF program and is ready to negotiate with Israel. And U.S. President Donald Trump makes deals worth $270 billion at the U.S.-Saudi Investment Forum as the Crown Prince pledges to increase Saudi investments in the U.S. to $1 trillion. Well, it's just gone 9 a.m. across the Emirates. I'm Joumanna Bercetche. Back in Dubai, I went to Lebanon for a couple of days, and we will later on in the show play part of our interview with the Prime Minister Nawaf Salam, so stay tuned for that. But another big development for markets in the last 12 hours. We had results come through from Nvidia, and actually they beat, and what we're seeing is very strong post-market performance, post-close performance. Nvidia up 5%, beating both on the revenue numbers, but also in guidance as well, so sending a really positive signal. Remember, one of the themes for markets over the last couple of weeks has been hesitation, people beginning to question whether AI is in a bubble and all of that. Well, Nvidia, which is the poster child for AI, actually did very, very well yesterday. So you're seeing that being reflected in the way these indices are trading. S&P is up 1.3%. The NASDAQ up 1.9%. The USD also up about 5 basis points. I will tell you the USD over the course of the last month is up 1.7%. So a lot of support beginning to come through for the greenback. Most of the year, we've talked about dollar declines. That has changed in the last month, and mostly because some of those rate cuts have started to get priced out. Take a look at two-year yields now, 3.6. In fact, what we're seeing is only 6 basis points is priced in for that December meeting, a cumulative 82 basis points by the end of 2026. So investors continue to price out the possibility of a rate cut in December. On that front, we are going to get some important data today. We get the September payrolls report, and that is actually going to be the last payrolls report that the Fed will be looking at before December because they've canceled the October one. There wasn't enough data. Lots of information here, but the point is investors were quick to assume that with less data, the Fed will probably be more cautious and will not cut. So that's what's going on there. And switching over, I just want to showcase what's been going on with Nvidia analysts' stock forecasts. And you can see in this term chart that the 12-month consensus price target keeps moving higher and higher and higher. This is a chart that our colleague David Ingles shared from Hong Kong. And I thought it was interesting to tell you that the market keeps getting more and more bullish on Nvidia, despite, again, a lot of the scrutiny about AI and whether it's in a bubble and whether there's too much capex spending going on. The average price target now is about $240 versus a current price of around $186. Now, speaking of Nvidia, Bloomberg has learned that White House officials are urging members of Congress to oppose a measure that would limit Nvidia's ability to sell AI chips to China and other adversary nations. This after Nvidia delivered a surprisingly strong revenue forecast and pushed back on the idea that the AI industry is in a bubble.
Sales are off the charts for Blackwell, and Nvidia GPUs in the cloud are sold out. We got plenty of Blackwells to sell you. We have lots of Blackwells coming. We're making a lot of Blackwells, and we have a bunch of Vera Rubins coming. And so business is very, very strong. Nvidia's forecast for China market is 0. We're going to continue to engage the U.S. government, continue to engage the China government to advise them and to encourage them to allow us to go back and compete in the open market. And so until then, we should assume 0.
And the U.S. has approved the sale of tens of thousands of Nvidia's AI chips to the UAE's G42 and Saudi Arabia's Humain. The deal is a major boost to the Gulf nation's technology ambitions and is contingent on both companies meeting, quote, rigorous security and reporting requirements, according to a statement from the Commerce Department. The export approvals are part of broader bilateral deals between the U.S. and each country, following months of negotiations that focused in part on China-related risks. Now, let's zoom in on how markets in Asia are faring after those strong sales forecasts from Nvidia. Min Min Lo is in our Hong Kong studio. Walk us through the price action in some of these key Asian stocks and, of course, some of the chip makers in the region as well.
That's right, Joumanna. Jensen Huang is like Santa Claus coming early, really fueling this relief rally across all Asian markets. You can see here everything in the green. Flip the board, you take a look at some of the chip stocks in Asia. The Nvidia suppliers really catching a bit here. TSMC up 4.3%. Advantest, this was at one point limit up at 10%. Now it's pared back some of the gains, but still a decent 8.2% gain. There's Samsung Electronics as well, up by 5%. But it's a very different picture in China. You take a look at the Chinese chip makers. The White House reportedly advising legislators to block a bill that will restrict Nvidia's advanced chips exports to China. But theoretically, that sounds good. But the White House or the legislators are still working on another bill called the SAFE Act of 2025 that will require the Commerce Department to deny applications of exports of any chips that are more advanced than the H20. This essentially removes any decision-making power away from the White House to the Commerce Department. So that is not very great news for Chinese chip makers. You can see mostly in the red here, Huang, OmniVision and Nauro is down 2.8%. SMIC holding on to gains of about 0.5%. Joumanna.
Bit of a mixed picture then. Geopolitics always in focus. Min Low in Hong Kong. Okay, let's go across to Singapore now, where our colleague Francine Lacroix is with her next guest at Bloomberg's New Economy Forum, which has been taking place over the last couple of days. Francine, I'll hand it over to you.
Thank you so much, Ju. I'm very excited to speak to Mark Coombs of Ashmore. We just had a terrific panel on debt and debt sustainability. So thank you so much, Mark, for joining me on TV this time. So look, the world is very uncertain. We've been spending 2 days talking about geopolitics, debt, and everything in between. What do you see as the biggest risk to financial markets now, and what does it mean for where Ashmore wants to be invested in?
Yeah, good questions. Thanks for having me, Francine. Pleasure to be here as ever. I mean, the biggest risk to financial markets at the minute is unexpected and mispriced geopolitical risk, is the inability to fund deficits for the larger economies, is people getting sucked in, walls of money chasing walls of money, people getting sucked in into mispriced risk. And you see that in developed economies or in emerging ones. And then in terms of what we're interested in particular now, for us, everything is about price and value. So if something's mispriced below where it should be, we like that, so we invest in that. So we've been thinking that emerging market equities have been extremely cheap for a while. And now we're in a situation where some of the economies are large enough they can grow on their own. They don't rely on a huge amount of exports to the US. And so that EM to EM trade is growing. And so we think there's a lot of opportunity for growth in EM equities. In the bond space.
What countries? Are there specific countries or specific industries?
That's a very good question. The best countries to play typically are the biggest ones because you can change your mind. But sometimes the bigger value is in the smaller ones. So that's about carving up your pie. So as a portfolio investor in EM, you look for larger countries where you feel that the demographic will help you in terms of scale and growing the size of business, but also where you can change your mind. And then in terms of value, sometimes it's smaller countries that are moving from smaller to bigger, or where they're changing the dimension of their debt dynamics or how the country is growing. So it's a bit bifurcated. The tricky ones are the ones that are small with nothing going on.
And then you were talking about bonds, and so that's the one thing to stay away from. I mean, where else do you see value?
Where do we see value in terms of, one of the things I see long-term value in, and it's a part of what we're trying to do, is build long-term infrastructure in emerging economies. They've started to do that, and in many cases, government realize the benefit of that as they literally, sometimes they're expanding their geographic reach within a country of many islands, or they're just reaching into rural communities they weren't there before. So we're looking for the three major things that we think are really valuable as a country develops, and that you stop going somewhere else to buy: education, healthcare, and infrastructure, power, water, roads, rail. So those three things, in terms of long-dated assets, we put a lot of effort into.
I know you worry about private credit. What are the implications of something uglier happening in private credit? I know Jamie Dimon, talked about more cockroaches out there, and then he suddenly, he kind of walked down the comments, but it was a good. Do you see cockroaches out there?
When I see cockroaches, I scream and run away, and that probably sums up my view to developed market private credit. I think it's completely anything where you don't mark to market, and you say, oh, it's okay, there's lots of dry powder, we'll always be able to refinance. I've heard that in so many markets so many times, and it's all good until it isn't. I do like properly structured private credit, though. I think sometimes private credit is ideal if it's tied to literally building infrastructure to a project or something where you have a 10-year asset and 10-year liability. So properly structured, no problem. But don't mark to market. We can do lots of it. We're going to retire before the pension fund figures it out. I don't like that.
But just to be clear, you're expecting some kind of market event tied to private credit, and how much, I mean, would it be systemic? Could it actually infect other parts of other classes?
I think depending on how much gearing there is generally within the sector, yes, everything can ripple. What will, in something like that, which is illiquid and isn't being marked to market, it's going to come at certain points when things need to be refinanced. So yes, you're going to get fraud situations, but you get that in anything. That's not private credit's fault. But if you get a situation where you have a big bulge in terms of need for liquidity and the market isn't there to do it, the repricing gets quite difficult. And yes, the price will move up a lot. And then you're going to get some companies quite highly levered and over their skis when they don't really want to be. So, yeah, I think I just don't like markets that never price.
How would you describe the markets overall these days? I mean,
Markets overall? Yeah.
They seem worried, but then they're fine. I mean, there was, the AI bubble was really concerning yesterday. Then Nvidia came out, and
exactly. He said it's all
nothing
fine.
to see here.
It's all fine. He looks great in a leather jacket. It must be great. Anyone looking that great? It's got to be great. He's a salesman, clearly, of bits of kit and as well as of the market. Yeah, I think that certain assets are very expensive. I mean, if you step back a bit, which is something I don't do very well, but I'll try. The US put massive stimulus in the system during COVID. 12 trillion above what a neutral fiscal rate would have been. 12 trillion. And that money went in the system, and the American part of it bought America, and the rest of the world sort of got sucked in too. So now you've got a situation where net international investment liabilities for the Americans are at 26 trillion, and 10 years ago they were at 7. So there's a huge amount of money that's gone into the US. So the things I worry about is if people make a sharp change of mind. Now, the conversations we're having, we love the US, it's the biggest, largest, most transparent, all of that's true. And so a lot of people are not sellers of the US, but the question is, are they marginal buyers? And where do they go from here? Because you can have just so much. If the MSCI world is 66, 70% of equities, it's like buying America again. So you've got to, so I think people are certainly thinking about where else they go and what else they do. And so the trick for us is to take them those places and to make them returns.
Talk to me about Indonesia. They have a new sovereign wealth fund.
Yes.
Is that impacting the sentiment that investors have on the country?
I think the creation of the sovereign wealth fund on its own isn't necessarily. I think what will impact sentiment will be when people see what happens after that. So what kind of direction, how does that fund invest? Having a sovereign wealth fund invest professionally with a mission to make a certain return over inflation or to provide a social security net with a clear mission of what it's going to do, I think people are quite happy with if they understand it. What people will be less happy with is something not transparent, where they didn't know where the money was going to go for what reason, and is that going to lever itself? Is it going to try and use some kind of quasi-statal? What's it going to do with the cash? So I think it all depends on transparency.
Will you do any co-investments with them?
We'd be completely open to it. Yeah, we've got a nice business in Indonesia. We've been there a long time. We love investing there, both bringing money in and investing local money. We've had a very good experience in Indonesia. We'd be delighted to work with them.
Any risks around that, or is it
around
public,
working
private,
with a sovereign wealth fund?
Or in Indonesia?
Oh, in Indonesia. There are risks in all countries, of course. What happens in emerging economies is normally the risks are properly priced, and in developed economies they're not. So, people think, well, there's no risk at all. Nobody would ever appoint Supreme Court judges and all that kind of stuff. So people misprice risk in the bigger economies and price them better in emerging economies. So the risks are always the same. Does the democratic model work? How are they funding themselves? How are they developing their economy? Are they investing for the long term? Do they have growth? Do they have inflation? EM economies are usually good because they manage inflation really aggressively. Because those guys understand it's what changed governments. You lose control of inflation, you lose control of the government. So there are risks everywhere.
Mark, final question on infrastructure, because you said this was one of your big plays.
Yeah.
Is it green investments? And actually, where specifically do you want to put the money?
So the answer is, it is some green investments. And for it to be green in infrastructure, particularly if you're doing long-dated stuff like power, you need a regulatory regime in each country that's giving you a level playing field in terms of selling the power into the grid. And so you're looking for power purchasing agreements where you can get a sensible deal out of it, and where you feel the regulation will survive changes of governments. So that does mean, so green, you need that very much. Less green, you need that less, but you still need some form of regulation. So yes, I think, and some countries are highly committed to that, not least of which because they themselves don't want to be dependent on imported hydrocarbons. So a lot of emerging markets, I'm really generalizing, but a lot of emerging market countries have sun and wind and sea. And therefore, renewables make sense to them purely as to being sustainable. When somebody gets upset and pushes the oil price up, they don't always want to just be price takers. So it's not just because it's green, it's because it's actually helping them diversify their energy risk.
Mark, thank you so much for joining us.
Pleasure, always a pleasure.
Ashmore, with that, Joumanna, I'm going to send it back to you, and we'll have plenty more throughout the day here from Singapore.
Francine, thank you so much. That was Francine speaking to the CEO of Ashmore Group. Well, Lebanon's prime minister says he's open to input from the IMF on compiling a draft law aiming to deal with an estimated $70 billion deficit in the financial sector, a process that could unlock much-needed funds for the crisis-hit nation. Speaking to me exclusively in Beirut, Nawaf Salam also reiterated readiness to resume negotiations with Israel.
We want, to work with the IMF. It's not that we want, but I think that we need an IMF program for itself, of course, but beyond itself, I would say, because an IMF program is like giving you, a certificate de bonne conduite. I call it. It's like taking your vital signs, tell that you are going in the right direction. And when I say beyond it itself, definitely, if we can get $3-4 billion, that's not nothing. We badly need such funds, but it's a door open. When you have, if you are in a program with the IMF, for investors, whether public or private, this means that you are in good health.
There are some reports, and the U.S. envoy Tom Barak referenced this, suggesting that Hezbollah have been rearming, and that they've been building underground drone facilities in the Bahr. Do you see this happening?
Well, of course. I read what Ambassador Barak said. To tell you the truth, we don't have. More of it is hearsay. We don't have evidence of such rearmament. This does not mean that we should not be vigilant, and we are vigilant on the frontiers. And believe we have a much better control today of the airport, of the ports, and more importantly, of the Lebanese-Syrian border. And these are the points of entry where arms could come from.
Is there anything stopping you from going faster? Is it perhaps the threat of civil strife, as Hezbollah have threatened?
Well, I don't believe, in civil strife, nor, as I said, more, they even used the term of civil war. I think, that was an intimidation strategy or intimidation tactics. Why can't we move faster? One, because we need to recruit more people, the army. We need to better equip the army, and we need to be able to raise the salary of the army and international security forces.
Yeah.
So we need more troops, we need better equipment, and we need, better salaries.
Well, to that point,
this is why we are working with the French and the Saudis on a special conference to support the Lebanese armed forces.
So
that's including, the army and the internal security forces, hopefully soon.
Okay, so something perhaps similar to what your predecessor, Michel Sleiman, did with the grant towards the army.
Similar.
Okay. I want to ask you specifically about the U.S. because the last couple of days, the visit by the head of the army, General Rudolf Heikel, was canceled. U.S. officials have criticized the Lebanese government or the Lebanese army over language that was used to describe Israel, but also over the pace of disarmament. Are you worried that Lebanon is losing the goodwill from the U.S.?
Okay, in terms of criticism, I mean, senators and representatives, I mean, were critical. I haven't seen, I mean, a formal statement by the State Department, by the Pentagon regarding the army. I know that some of the general's appointments in D.C. were cancelled. Actually, he ended up cancelling himself his visit to D.C. and the army, I mean, issued a statement to this regard. And I mean, that's what, beyond, I mean, this, we have had over the years, again, if I may use the term, a very special relationship, or the army has a very special relationship with the U.S. Most of its armament comes from the U.S. Training comes from the U.S. Very recently, the Congress had approved $190 million for the Army and $40 million for the international security forces, for which we are very grateful. But I understand, I mean, that now, I mean, I don't want to call it a crisis moment, but I'm sure that we'll be able to overcome very soon, I mean, this incident.
So when U.S. ambassador referred to Lebanon leadership as dinosaurs, or that Lebanon is a failed state run by dinosaurs, you're going to prove him wrong?
I mean, indeed, there are. Personally, I have used also this this term of dinosaurs in some of my writings on the Lebanese political life and the Lebanese political system. Actually, the system is a very rigid system with entrenched interest. I mean, whether confessional, family, etc. So, I mean, it has an aspect of Jurassic Park, the system, but it can evolve, and best way actually to keep reforming the system is to fully implement, I mean, the Taif Accord, which has not been the case over the past 30 years plus, and I'm hopeful since, I mean, we started now, as I mentioned earlier, a number of reforms. Believe me, I mean, the road was not paved with roses, but still, I mean, we managed to overcome a number of obstacles.
Yeah. Now, Israel still occupies 5 points in the southern part of the country. What are you hearing from the Americans vis-a-vis their conversations with Israel, and whether they're actually also having talks with them about potentially withdrawing from those points?
Okay, unfortunately, I mean, the problem is not limited to these 5 points. I don't know whether you have heard, I mean, drones over Beirut, I mean, they continue, I mean, violating Lebanon's sovereignty. I mean, they are in these so-called 5 points. They still detain a number of quote-unquote prisoners. Well, the problem with the 5 points, I mean, is that they have no military, security, strategic value in themselves. We are in the age of satellite imagery. We are in the age of drones equipped with the most sophisticated lenses. We are in the age of balloons, also with cameras monitoring what's going on the ground. We are not in World War I. We are not in 1914, 1915. You need to be on top of a 600, 700 meter hill with binoculars to monitor what's going around. This is why, I mean, these positions have no military or security value. It's a tool to pressure the Lebanese. The problem is that according to the announcement of cessation of hostilities that was reached with Israel exactly a year ago, a year minus 1 week, it was on the 28th of November 2024. Israel was supposed to withdraw in 2 months. So they are 10 months later, not having fully withdrawn, not abiding by the agreement. And that agreement, I mean, was sponsored by the U.S. and by the French.
Do you think the Americans should be putting more pressure on Israel to honor their side of the agreement?
Well, we are not leaving a stone mobilizing, I mean, all possible Arab and international support to put pressure on Israel not to do more than only respect its own engagements.
Yeah. A few weeks ago, the Lebanese president, President Huang, said the language, this is a quote, the language of negotiation, this with Israel, is more important than the language of war. And people read that as an offer to negotiate either directly or indirectly with Israel.
I am ready to repeat that same offer. Readiness to negotiate with Israel. That's not the first time. I mean, we were negotiating with Israel. We did it in order to delineate our maritime border with Israel 2 years ago. We are ready to go back to negotiations with
Why do you think Israel have not accepted?
I mean, really, I mean, that's a puzzle for me. I mean, they ask for negotiations. When we show readiness, they are not at the rendezvous. But that's something, I mean, I'll be bringing up with the Americans.
That was Lebanon's Prime Minister Nawaf Salam speaking to me exclusively in Beirut. Well, plenty more ahead on the show. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Nvidia's surprisingly strong sales forecast, soothing fears over stretched AI valuations, sending Asian stocks higher, even as traders all but wipe out bets on another Fed rate cut this year. Lebanon's prime minister says his nation needs an IMF program and is ready to negotiate with Israel. He sat down with me for an exclusive interview in Beirut. And U.S. President Donald Trump makes deals worth $270 billion at the U.S.-Saudi Investment Forum. We speak to Hasan Al Hasan, Senior Fellow for Middle East Policy at the International Institute for Strategic Studies, on what this means for the kingdom and the region. Well, it's just gone 9:30 a.m. across the Emirates. I'm Joumanna Bercetche in Dubai. Let's get you up to speed on these markets. The main event yesterday, Nvidia earnings coming through. And guess what? It was a beat, both on revenue and on guidance. So positive signal to the market. The market narrative over the past week has changed, with many questioning the durability of this rally that we've seen in AI stocks. But that has changed overnight, with the poster child actually posting better than expected results for Nvidia. So S&P futures up 1.3% today. Nasdaq, you can see, up 1.8%. Nvidia itself is trading up 5% in after-hours trading. And then the USD seeing a bit of love this morning. It's up 6 basis points, up more than 1.7% over the past month. So we are seeing some support come through for the greenback here. And this perhaps on back of investors being quick to price out some of the rate cuts that are priced into the U.S. yield curve. Two-year yield sitting at 3.6. Only 6 basis points probability of a rate cut priced in now for December. And that is because the minutes that came through yesterday were quite hawkish, indicating that quite a few policymakers are not inclined to cut interest rates at this point. Plus, there's a lack of data. Today, we will be getting the BLS, the jobs data for the month of September, but the month of October has been cancelled, which means that the Fed have less data to deal with when making their decisions, and why the investor community are assuming that in the absence of data, they will probably be more cautious. So that's sort of one of the narratives that's been prevailing in the last couple of days. Let's switch over, though. I do want to talk about Nvidia once more. This is a chart that came through from our colleague David Ingles in Hong Kong, and I thought it was really illustrative of the fact that, the analyst community still remains so bullish on Nvidia, and the price target, the 12-month consensus price target, keeps moving higher and higher and higher. And no doubt once again yesterday after those really solid set of results, you're probably going to see more consensus price targets move up. So this is just a reflection once more of how bullish the analyst community are, despite the narrative out there that there's some cautiousness prevailing when it comes to AI tech spend and all of the CapEx spending that's been going on in that space. But Nvidia perhaps posting a counter argument to that. All right, President Trump has praised the big deals being signed at a U.S.-Saudi investment forum during Saudi Crown Prince Mohammed bin Salman's visit to Washington. The Crown Prince has pledged to increase Saudi investments in the U.S. from $600 billion to $1 trillion, though, without giving any details.
We're told that $270 billion in agreements and sales are being signed between dozens of companies, and that's just happening today, $270 billion. That's big stuff. So on behalf of the thousands of American workers who I care about most, I want to thank you for bringing all those jobs and all those great opportunities to America.
Joining us now is Hasan Al Hasan, Senior Fellow for Middle East Policy at the International Institute for Strategic Studies. Good to have you with us, Hasan. So I will say the Crown Prince came home with quite an extensive list of deliverables. The ability to buy F-35s, he got an AI deal, he got an upgraded security relationship. This morning, some headlines coming through about forging a civil nuclear defense deal. Before we get into any of the details, would you characterize this trip as a success for the Crown Prince?
I think it is undoubtedly a success for the Crown Prince and for Saudi Arabia. After all, Saudi Arabia was able to walk away with a significant number of achievements, some of which you've mentioned. Most notably, I think the approval for the sale of F-35s, the Strategic Defense Agreement, an agreement on civil nuclear energy, an enhanced critical minerals partnership, an AI deal, and designation as major non-NATO ally status without really pledging to normalize relations with Israel, which had been a condition that was very much in place under the Biden administration. So I think they did manage to walk away with quite a bit. Now, there are obviously significant Saudi commitments in return. So there is the commitment to up Saudi investments into the U.S. economy from $600 billion to $1 trillion, even though that's open-ended and somewhat vague. And there's, of course, the additional Saudi commitment to finance and take on some of the cost of the U.S.'s military presence in the region as well. And we don't know to what tune that's going to be. So I think it is a significant win. There are a few questions that remain. There are certain things we don't know about what additional defense commitments, for example, this enhanced defense relationship imposes on the United States. We don't know how many chips the Saudis are going to get and how sophisticated they're going to be. We don't know exactly how the civil nuclear agreement resolves some of the long-standing differences as well. So there are still several unknowns, and I guess we'll have to wait a bit longer until we have the full picture.
Yeah, Hasan, I want to unpack something that you mentioned, which is the fact that there were no political preconditions for some of the economic and defense deals that were forged over the last couple of days, i.e., even in the absence of Saudi formally committing to join the Abraham Accords, many of these deals went ahead. Does that mark a real shift in the way the U.S. administration is approaching Saudi Arabia?
I think it does represent a shift. I think the ability to compartmentalize, to separate the bilateral dealings on geoeconomic issues like civil nuclear energy, AI, critical minerals, and the like from regional politics, I think is a very important accomplishment for the Saudis. And I think it aligns quite well with both sort of the U.S.'s America First approach and Saudi Arabia's similar Saudi Arabia First approach under both President Trump and Crown Prince Mohammed bin Salman. So I think this aligns with their broader dispositions, and I think it's an important shift in approach that allows the two countries to move forward, I think, in a mutually beneficial manner without really holding themselves hostage to the policies of Israel's extreme right-wing government.
What about this trip from the perspective of the Americans and for President Trump? It was very notable during the press conference, and I watched the press conference, that one of the reporters specifically asked about the killing of Khashoggi. She also spoke about the victims of the families of 9/11. You know, this is still very much a prevailing narrative in the U.S. right now. How has this trip gone down with the broader American public, and has it actually bolstered President Trump's public image, or is he likely to be criticized for it?
Well, I think President Trump was very quick to brush off some of these concerns and criticisms, and this is his, I think, personal style across various points of criticism that he has faced throughout his presidential career. I think President Trump would instead like to focus on the additional jobs that Saudi investments are likely to create in the U.S. economy, to brandish the fact that he has managed to convince the Saudis to increase their investment commitment by an extra $400 billion into the U.S. economy. And then there are actually tangible benefits that the U.S. Gets from some of these agreements. So, for example, on critical minerals, the U.S. has been very keen on breaking China's chokehold on, for example, rare earth element supply chains, where China essentially dominates 90% of those. And as a result, the U.S. and Saudi Arabia have signed an agreement back in May for Saudi Arabia's national champion, Ma'aden, to partner with a U.S. company that is owned by the U.S. Department of Defense to essentially kickstart Saudi Arabia's exports of heavy rare earth elements to the United States. So there is a real tangible benefit here in terms of U.S. raw material and U.S. critical mineral security. The same thing goes on for nuclear cooperation. I mean, the Americans don't want to lose Saudi Arabia to the Chinese or to other competitors on nuclear energy. Same goes with technology. I mean, U.S. tech giants like Nvidia need to be able to sell chips to raise revenues and maintain their lead on innovation and research and development. They need partners that are able to invest capital in expensive data centers and electricity and energy upgrades. And they need to partner with a country like Saudi Arabia or the UAE that is very well positioned to act as a platform to service emerging market economies in Asia, Africa, and the Middle East. So I think this is a mutually beneficial arrangement. And I think President Trump is more likely to focus on the positives rather than spend most of his time dealing with criticisms.
Hasan, thank you so much. Hasan Al Hasan, Senior Fellow for Middle East Policy at the International Institute for Strategic Studies. Now, Abu Dhabi's Lunate will raise a higher amount for funds launching in 2026 after deploying roughly $13.5 billion so far. The asset manager raised about $17 billion in 2024 for its flagship funds and invested around 80%. The firm has transformed itself into a prolific dealmaker, overseeing $115 billion in assets and signing over 100 deals since its inception. And coming up, the U.S. warns South Africa against issuing a joint statement at the G20 summit. We're live in Johannesburg with the details next. This is Bloomberg. Kenya's largest lender by market value, Equity Group Holdings, aims to operate in 15 African markets by 2030. That's compared with 6 now. CEO James Mwangi spoke to our Jennifer Zabazaja at the B20 South Africa Summit in Johannesburg.
The corridor that we have exploited the most is the northern corridor that links Kenya, South Sudan, Ethiopia, Uganda, Rwanda, and Eastern DRC. The second biggest corridor we have is the DRC to the Indian Ocean that then goes through Tanzania, goes Mozambique, goes through Angola, particularly with the new investment on that corridor. So we see that as the next big thing because you are facilitating trade. And if you look, as you later said, the DRC has now become a $5 billion balance sheet. So that balance sheet shows that there is a lot of economic activities that needs to be facilitated across to the export ports.
So there's quite a bit of growth then we could still see from DRC, your presence in DRC in the near term.
If you look at that region entirely, it has become the fastest growing region in the world, averaging 6-7% GDP growth rate. So we are seeing a huge wave that is supporting trade. If we look at DRC contribution to strategic minerals, that gives us a huge headroom or a long runway in terms of trade opportunities. And so when we look at it and the construction of the Obito corridor, the connection to the port of Dar es Salaam, and so you see that is where then the hugest opportunity will be. And we are hoping that Africa's time to industrialize is with us. And so you see that as an area that can lead Africa in industrialization because it's very rich in agricultural produce. So agro-processing could be a priority. It's very strong in mineral resources, so it can start adding value. And given that it's rapidly growing, it's a huge attraction to global capital.
Well, for more, we're joined by the lady herself, our chief Africa correspondent, Jennifer Bercetche. You've been busy the last couple of days, my friend. Walk us through how the mood is heading into B20 and G20.
Right, Joumanna. I mean, of course, we did have the Bloomberg Africa Business Summit, but we are in the midst of the B20, right ahead of the G20. I was speaking with James Mwangi there, who is the CEO of East Africa's biggest bank. He was really echoing a lot of the sentiment that we've been hearing over the past few days, which are the opportunities that still exist despite some tasks taken unilaterally by the U.S. And others. There still seems to be a lot of optimism for potential deals to come through and cooperation throughout the next few days, not just in the private sector community, but also the public sector. So the G20 is happening over the weekend. We do know, of course, the U.S. President Trump will not be present here. But what we've been hearing from South African officials is that they are still optimistic that there will be some sort of unity amongst the leaders that are here. There are a number of European leaders who will be here, of course, leaders from Asia as well. The big question that many people are wondering, though, is what is the ultimate outcome of this week? It's seeming like, at least within the business community, and we're standing outside the B20 where President Ramaphosa will be in a few hours, it's seeming like they feel that there has been progress and they are all on the same page as far as cooperation and finding more ways to do business with each other, as Mwangi was saying just there, finding the corridors that will be the future of trade for a number of these countries. The question is, though, will we see a declaration at the end of this G20 summit? The U.S. has reportedly said that they will not support a declaration, potentially will only support a lesser, to less extent, as influential, a chairman's statement at the end of this. And that is what they say, their opposition to what South Africa has touted this G20 and B20 as one of solidarity, equality, and sustainability. So we're waiting to still see what the rhetoric is going to be like from President Ramaphosa when he does come here later today. Ursula von der Leyen will also be here. And so we will see where these leaders can find unity despite what is still seeming like very much opposites and still differing priorities amongst a number of these nations that actually do make up the G20 itself.
Yeah, I mean, even during the Trump MBS press conference, President Trump didn't miss an opportunity to criticize the upcoming G20. So that's the backdrop. Jennifer Bercetche, our chief Africa correspondent in Johannesburg, thank you so much for breaking it down for us. Well, coming up, Nvidia's results calm jitters of an AI bubble. We hear from the CEO, Jensen Huang, next. This is Bloomberg. Nvidia's strong revenue forecast for the current period is helping counter concerns that a global surge in AI spending is poised to crash. But the CEO, Jensen Huang, told us that Chinese sales are not included in their outlook because of U.S. restrictions. He spoke exclusively to Bloomberg about seeking to re-engage with China and the upbeat forecast.
Sales are off the charts for Blackwell, and Nvidia GPUs in the cloud are sold out. We got plenty of Blackwells to sell you. We have lots of Blackwells coming. We're making a lot of Blackwells, and we have a bunch of Vera Rubins coming. And so Business is very, very strong, but we've planned our supply chain incredibly well. We have the largest supply chain in the world. Our partners, TSMC, our memory partners, SK Hynix, Micron, Samsung, are doing a fantastic job supporting us. And all of our systems partners, Foxconn and Quanta and Wistron, our packaging partners, everybody's doing a fantastic job supporting us. And we've done a good job planning for a very, very strong year. And we've done a good job planning for Vera Rubin. So sales are off the charts. Nvidia GPUs in the cloud is sold out, but we've got a bunch of Blackwells to sell.
Jensen, what's the road ahead for Vera Rubin? It's one of the most common questions we get for you of how that ramp will go relative to what we saw with the Blackwell generations.
Well, the silicon for Vera Rubin, 7 different chips are back in our labs. And the bring up is happening across engineering teams. Probably a couple of 20,000 people are working on bringing up Vera Rubin, from silicon to systems to software to algorithms. People are working around the clock, and this bring up is going beautifully. We're on track to deliver Vera Rubin about Q3 timeframe of next year, continuing our once a year cycle. Vera Rubin is already assured a huge success. Everybody's incredibly excited about it. Can't wait to show everybody. And then one last thing is that the rack architecture, the rack scale architecture is completely revolutionary. It includes a scale up switch called the NVLink. NVLink 72, our 5th generation, is the only one of its kind in the world. This rack architecture, which is incredibly complex, started with Grace Blackwell, then Grace Blackwell Ultra. It is transition to Grace Blackwell Ultra is incredibly seamless. The same rack scale architecture is going to be used for Vera Rubin. And so the supply chain is all used to it. This complexity that we enjoyed with Grace Blackwell transition, we're now incredibly smooth running. And so I think Vera Rubin is going to be just really smooth, and we're going to ramp it really hard.
Jensen, I tried to go through what the CFO Colette Kress said about China. In the quarter gone, it seemed like there was not meaningful H20 sales because the demand wasn't there, even if you were permitted to sell H20. And then in the current period and going forward, Nvidia seems committed to working with both the United States and China to sell what Colette called more competitive compute. Where do we stand with that? And could you just clarify what Colette was talking about in the current state of play for China?
The most important thing she said is that we've said for some time now, our forecast for China is 0. All of our forecast guidance that we showed, 0. We should start. That's the most important thing that she said. She also said that effectively China is a very important market to us. It's very important to the United States. It's very important to China. We would love the opportunity to be able to re-engage the Chinese market with excellent products that we deliver and to be able to compete globally. The Chinese market is very large. This year, my guess is probably about $50 billion. It's great for the American people that we're able to compete in the Chinese market. It's great for the China market that we're able to provide NVIDIA's technology to them. It's great for the rest of the world as Chinese software companies and Chinese open source models leave China and are used all over the world. And so I think it's fantastic that it would be fantastic if we're able to participate in the China market. But for now, we should just assume our NVIDIA's forecast for China market is 0. We're going to continue to engage the US government, continue to engage the China government to advise them and to encourage them to allow us to go back and compete in the open market. And so until then, we should assume 0.
Well, that was NVIDIA CEO Jensen Huang speaking exclusively to Bloomberg Tech anchor Ed Ludlow after the results came through. A beat on revenue and a stronger guidance posted. So very strong after-hours performance from NVIDIA. It's up 5% in trading. But a couple of terminal charts that caught my attention today. I spoke about this earlier, but the market has been quick to price out rate cuts at the December meeting, only about 6 basis points priced in. And this is because the minutes have showed that sentiment from policymakers is pretty much split. split. There are many who don't think that the Fed should be cutting rates. The other chart that I want to leave you with is what's been happening with Bitcoin. Big drawdown going on there, the lowest level since April, and actually tracking negative on the year now. So keep an eye on the crypto community and what's been happening in price action in that space. All right, that's it for Horizons Middle East and Africa. I'm Joumanna Bercetche in Dubai.